Simplicity is the outcome of technical subtlety. It is the goal, not the starting point. Maurice Saatchi. My friends, we keep it simple, and that is the outcome of our technical subtlety. That's our goal. That's not our starting point. In other words, we have honed over time the ability to work ourselves into this simplicity by knowing what we are doing and honing down our original ideas into things that work over and over and over again. That is what weekly vertical crossovers are all about. That's what 2-week recrosses are about. We again look for trends to follow, good solid trends on ETFs that are easy to track. That includes the S&P 500 as represented by SPY, the NASDAQ 100 as represented by QQQ, 20-year government bonds, TLT, GLD gold, and here lately we've been helping you follow Bitcoin. Now, complete opposites of what we saw yesterday, everything up for the day. And of course, we have been warning you over and over again that when you jump into a weekly vertical crossover, what do? You, of course, set your profit and loss bands from the beginning. And we talk about that over and over and over again, the importance of doing that. Now, let's look at where things are moving this week, going into the second week of the weekly vertical crossover that occurred, where you had some wonderful opportunities lately to actually take your profits and reap your rewards. This is an up day. Doesn't mean the markets have turned around, but we are seeing a big swing for the day, particularly in the NASDAQ 100, which of course was down big yesterday, swinging back the other way today. We also see the S&P that we're on that chart right now, 1.43% up, went from a red down candle to a green spinning top, and we see a green open box top. Oh, by the way, those of you who tune in to chartingwealth.com all the time, you notice that we did not update it yesterday, and I have not been able so far to update it today because of a problem with the WordPress site. We are not being granted access to it because of some technical change. I've been on the phone all afternoon with engineers trying to figure out what in the world is going on. We are working on that. You guys know I'm a maniac about. I never miss updates. So this very much upsets me, although you can still access all of our training and everything else at YouTube, which is probably where you're listening to this now, or you are listening to the podcast, and we update those every day, but I can't update the darn website, and it is very annoying. I hope to have that resolved on Wednesday. I'm doing everything I can to make it happen either tonight or Wednesday. So forgive us. You can go back and look back in time. Never missed postings. Never. This is very upsetting. Anyway, what we see happening is a green spinning top right now. Derivative oscillator still heading down. Price percent oscillator losing some of its downward momentum, but still slightly pulling away from the red signal line. Look at this 2-day chart. You can see where the 2-day candle that ended on Friday is where we had that big, strong bounce down. Look at the latest 2-day candle representing Monday and Tuesday. You see a green up candle. We haven't seen one of those since a green up candle all the way back on Wednesday, the 17th of February. That's an open box green up candle with a long wick on the top, pushing above the prior red candle, pushing above the weekly trend line and through the 2-day trend line. So that is showing some significant up movement. Derivative oscillator still barely moving down. Price percent oscillator flattening. Look at the half-day chart. You can see where things bottomed on Thursday morning, and then slowly, exorably, it has been moving up, pushing through on that half-day chart. Back on Monday afternoon, we saw that occurring on Monday afternoon after it had also breached it on Monday morning and popping up high. And then, of course, on Tuesday, moving up through in the morning and about the same height in the afternoon, like we set up, 1.43%. And again, we have been telling you since we had that weekly vertical crossover to again, make sure you set your profit and loss bands from the beginning and take advantage of the movement. We don't stay in things forever. Why? Because trends change. Not that this is not going to go back to moving down overall. The energy is still down, but again, we see some corrections here. Doesn't mean that it's not going to go up, but we want to make sure we capture profit when that is available in your practice trades. Now we go to the Qs, and again, when we look at the Qs, even though it was a big update, almost 4%. In the past, my friends, that's virtually unheard of. Just unheard of on an index like that. 4% up for the day? Are you kidding me? That's just crazy. But we see that, again, the overall mood pairing off a little bit, still down on the derivative oscillator, price percent oscillator. We can see where, and again, representing lots of that movement on Monday, where things were down strong. I guess we can redraw our trend line and adopt a bit of a better one. There we go. But again, still stronger down movement in the Qs showing. You can see a green, solid green candle as far as the Monday, Tuesday candle. That again, price percent oscillator still heading down, derivative oscillator almost flat. But again, a big slowdown. But again, price below the weekly and the 2-day. Look at that half day. And that is where we see where things dropped hard on Monday afternoon, but then popped up Tuesday morning, Tuesday afternoon on that half-day chart, pushing through the 2-day trend line and a crossover. So we'll go ahead and note that by redrawing our trend line there. And we will continue to watch and see as stocks develop, as the weeks move on, some wonderful points along the way to reap profits in the Qs. So important, again, to pay attention, set those profit and loss bands before you enter any trade. What do we see happening on bonds? Of course, we had that 2-day recross on bonds in the not too distant past. And bonds, again, hit their low back on the week ending the 26th of February, have continued to move down overall, but not hitting that low yet. Price percent oscillator still going down, derivative oscillator about flat. 2-day chart, we can see that it's still negative, but moving up ever so slightly on the price percent oscillator. And again, you can tell where that low of lows was back on Thursday, the 25th of February. That represented, of course, the 24th and the 25th, Wednesday and Thursday of February. Derivative oscillator's been losing momentum since then, as we've seen a sideways slide moving down a little bit, pushing through that nice, what had been a nice strong 2-day trend line. We go to the half-day chart, and of course it's been positive for a while, since all the way back on the afternoon. It crossed over on the afternoon of Friday the 26th of February, popped up and then sideways and down, but not enough energy to cross over. And we can see where things moved up on Monday morning, and then a little bit more in the, Tuesday morning, a little bit more in the afternoon. That's where we are on bonds. Gold up 2.13%. And we can see the last 4 weeks, strong down movement in gold. Actually hit a lower low on Monday. Derivative oscillator pairing off, well, continuing to move down. Price percent oscillator losing a little bit of that downward momentum on the weekly. Look at the 2-day, same thing. Derivative oscillator losing some momentum. We see that, again, we've got still a decent red down candle, even with all that up movement on Tuesday. So overall, gold still has that downward pressure on it. We see on the half-day chart where gold boomed up in the morning, about the same in the afternoon. Again, overall, big up day for gold, 2.13%. Doesn't mean that gold is all of a sudden, we've seen a weekly vertical crossover. Nothing like that. It's got a long way to go before that happens. So we'll keep our eye on things, just see what's happening in the market and how this continues to play out. That's where we are in our 4 big charts. Now, let's look at Bitcoin. We can see where Bitcoin topped all the way back on the week ending the 19th of February. And this is the first green candle we've seen in the last going into 3 weeks now. Price percent oscillator yesterday was trying to cross through the red signal line on that weekly chart. Now, as I told you, if there's up movement, it won't stay that way because it's not finished drawing yet. It won't finish until Friday. It's pulled back through. It is just above the red signal line now. Derivative oscillator still negative. Looks like it might be losing a little bit of momentum. Go to the 2-day chart. Price percent oscillator's flat. Derivative oscillator still negative. We have a green open box candle, the first we've seen in several days. Let's see, 1, 2, 3, 4, 5, 10 days. So again, this represents day 11 and 12 after those 10 days of sideways sliding and down. Don't have a 2-day recross yet. We'll wait and see just what Bitcoin's going to do. The previous high that we saw was 53,665, 54th, so it has hit a higher high during the course of this latest 2-day candle. But again, price percent oscillator still negative. We could have a 2-day recross coming up in the not too distant future, but again, overall mood is heading down. We look though the last 2 days, we've had strong up movement in Bitcoin on that half-day chart. And of course, that crossover going up, that half-day crossover going up in the morning on Tuesday. Again, we'll continue to watch. What we're primarily looking to see, is there going to be a 2-day recross, or is Bitcoin going to weaken as the week moves along and a weekly vertical crossover going down? Both those things are up in the air. We'll let the charts lead us. That's where we are, folks. As we end the day, again, I'm sorry about the website malfunctioning on us, but my engineers and folks are working on it, trying to figure out what's going on and fix it. Thank you for your patience. God bless you all. All the best from the whole team at Charting Wealth World Headquarters.